If you are going to do exactly what I'll tell you in this video, then you will get profitable within 90 days. Just like my student, someone who traded a negative risk to reward ratio for just a month and outperformed 99% of all traders. Now look guys, this has nothing to do with talent, nothing with intelligence, and this is also not because he has a lot of experience. And in fact, the reason why this works is almost uncomfortable, because it means that 99% of traders are not using it and therefore they are just not profitable. So basically you are failing because of no reason. Now look, most traders don't fail because their strategy is bad. They fail because they are trading a structure that requires perfect market execution. Anything that is less than perfect is not going to work. And the higher your risk to reward is going to be, the more perfect the market needs to be for you. Now let me show you why. The market is not complex. It's not indicators, it's not patterns, and it's certainly also not SMC, ICT, or whatever other BS that you have heard so far. The market is only two things. It's time and it's also price. Every trade you have ever taken, whether you realize it or not, was a bet on these two variables. And here's where most traders completely misunderstand why the markets actually move a certain way. So take this as an example. So I am going to gift you a talent of the market. So basically you know exactly the timing when certain things are going to happen. Now keep in mind, I'm not telling you where the price is going to go, only when. And you will tell me that at exactly 3 p.m. price will either take out the high or the low. So you know when something will happen, but you still don't have an idea what will happen. You can't place a trade, you can't manage risk, and you can definitely also not build consistency with just that alone. So let's completely flip it. So now I'm going to take away the talent that you know when price is going to move. And now I'll give you only the talent that you know where price is going to go. So let's just say you're going to say that price will take out this low before it's going to take out this high. Sounds powerful on its own, but also doesn't mean much on its own. Because here's a problem no one talks about. You have no idea when that will happen. So even if you know where price is going to go, you still couldn't understand when is that actually going to happen. So matter of fact, you'll just be stopped out, even though you knew where the price is going to go. So in this example, this is where traders are start doubting and micromanaging, moving stops, or even closing trades early. Not because they are wrong, but because they are just early, too late, or they just couldn't know when that is going to happen to begin with. Now you might be thinking, what is the point of all of this? Why are you explaining this to begin with? If I know price will eventually go to the low, why don't I just put my stop above the high and take profit at the low? And I know you might be saying, oh my god, he's trading a negative risk to reward. Everything I have seen so far on TikTok, on Instagram Reels or whatever is trading at least a minimum 1 for 10. But the reality is that this has not worked for you for years now. Whether you have just started out, then let me save you years of wasted money and time. And if you're trading for years now, then let me save you further losses. Now here's the illusion of a high risk to reward. That setup requires extreme precision. I have already told you previously. You're asking the market to be right, fast, clean, and without any deviation, without any consolidation. Now this would be in a perfect world if this would actually be like that. But this is not how the markets move, and this is also certainly not why a high risk reward will never actually work over a long period of time. Now look, a negative risk reward trader does something completely different. They don't try to eliminate the drawdown, they just simply accept it. Even if the trade goes into a drawdown, that is not something that I'm worrying about, because I'm just used to seeing it and I know that the market is very unpredictable and volatile. But that doesn't mean that I just completely have to be precise on every single pip movement. So this is the classic example. I'm just going to enter the trade because I know that this certain low is going to be taken out. By giving the price room to breathe, you're no longer betting on precision. You're betting on the probability that this low is going to be taken out before this high is going to be taken out. As an example, this is a 0.5 risk to reward. So it's basically a 50-50 whether I'm going to be right on the trade or not. I've told you previously, price matters more than time. If you're just slightly early on a negative RR, you're usually fine. If you're just slightly early on a high risk reward, you're out of the trade and you have lost the entire day, and you're just mad because you have taken this exact setup. And this one difference is what separates the profitable trader from the unprofitable trader. Now okay, all of this price and time talk is easy to understand, but now I'm going to dive deeper into why a high risk reward is not practical in the live markets. Simple as that. A high risk reward forces a low win rate. Low win rate destroys psychology, destroyed psychology kills discipline, and therefore without discipline your strategy doesn't even work. You can have the best strategy in the world, but if you're not able to execute it perfectly, then what is the strategy really worth? Now let's compare two traders. Person A trades a high risk reward. Person B trades a low risk reward. On paper, person A should make more money, right? No, not really. In reality, almost every single time what happens is that the high risk reward trader is just going to get on an excessive losing streak. And that's not just being unlucky, that's also not certain market conditions, and actually that's not even because your strategy doesn't work. It's mathematically guaranteed that this is going to happen because your win rate is just too low. So eventually what will happen? Months pass, no payouts, no hope. Person B might lose once, maybe twice if they're unlucky, but in the long run they will just win a lot more trades. Why? Because a lower risk reward ensures a higher win rate. Now you might be saying, but a negative risk reward trader is only making small wins over time. How can this guy actually make more money than a high risk reward trader? Now here's something that most people miss about it. Negative risk reward traders can risk more per trade. Why? Because they don't lose that often. Now what is the reason why a high risk reward trader is not risking more than 1% per trade? It's because they can expect to lose 8 times in a row. Now a low risk reward trader is not going to lose that many times in a row. So take me as an example. I have a 95% win rate. I'm not going to lose 3 times in a row. The most I will ever lose in a row is 2 times, and that's only if I get really unlucky. So a low risk reward trader can even risk up to 3 or even 4% per trade. And here's the big fear why everybody is not going to trade a negative risk reward, even though it's objectively better in your psychology and you'll just make way more money, I promise it to you. But let's go over some of the concerns of everybody that is watching the video right now. What if the negative risk reward trader loses 2 times in a row and risking 4%? Well, it's possible. But then he's already taken multiple payouts from prop firms. So even though he is actually blowing the account, he has made so much money along the way that it doesn't even matter that he has just lost 2 times in a row. Because remember guys, when you are trading with prop firms, you are not actually trading with real money, and certainly you're also not really trading with your money. So you're getting paid by the house. And if that still feels aggressive and you don't want to go through the evaluation once again, then just go and risk 2%. But I still don't recommend just risking 2% with a negative risk reward, because I have a question for you. Are you really going to lose 3 times in a row with a 95% win rate? Now, and speaking of prop firm passing, I have a prop firm passing evaluation service. So if you're having struggles passing your prop firm challenge, then I will pass it for you. Everything is in the description down below. Now, as you can see, we're just stacking up the benefits over and over again. We have already had a couple of reasons why trading in negative risk reward can also have some downsides, and even those are just so minimal that objectively you should also trade in negative risk reward. But here's another very good benefit of trading in negative RR. It's perfect for somebody who's just working a regular job. Now look, I've been there myself. I've been working a regular job, and by the time that I came home, the market's either already closed, the session is over, or my setup has shown up. But while it was showing up, I was working, and therefore I couldn't take it. Because you can't watch the charts all day while also having a busy life. But what have we talked about earlier? With a negative risk reward, you don't need to have perfect timing. So in theory, you could actually enter the trade at any given market once you actually know where price is going to go. Now guys, if you are still doubting to trade a negative risk reward, then I have a small challenge for you. Go on your favorite instrument, crypto, forex, futures, it doesn't matter. Go on your favorite time frame and execute a negative risk reward trade. What I recommend is going for a 1 for 0.2 risk reward. Based on what I will show you how I am executing my negative risk reward trades. I will now break down the strategy that I use to trade negative risk reward, and I'll show you 2 examples. The first example is going to be where it's very clear and it's easy to spot where the market will go. The second example is going to be a little bit harder and advanced. So we're currently on the daily chart, and what can we spot? We have this established movement onto the upside. So this is telling us that currently on the lower time frames we are trending upwards. Now granted, we have this entire price action move which has been going lower and lower, but we really only care about established movement onto the upside or downside. Now what is established movement to begin with? It's when you have a couple of certain candles which are just going into one direction. So that means that currently the market is just going higher. Remember guys, this on the daily chart. As a day trader, you don't want to zoom out of the charts to see months and years of price action data. This is not what a day trader is supposed to do. So from here on, what can we spot? Since we have established movement onto the upside, are we going for the previous day high, or are we going for the previous day low? So probably, since we have already established movement onto the upside, we'll go for the high and not for the low. But there's one more thing that we can spot on the daily chart alone. Because we have relative equal highs. Now what are relative equal highs? It's when you have two swing highs being relatively equal close to each other. That will result into having a lot of liquidity above or below these kinds of levels. So after analyzing the daily chart, we will drop down onto the 4-hour time frame and look for more confirmation on why the price should continue higher and not lower. Now remember what I have told you earlier on the daily chart. This is pretty fractal and it doesn't matter on which time frame you are. This is already established movement onto the upside on the lower time frame. So if we're just going to go onto the 1-hour time frame, we will see a small little downtrend. So this alone is indicating to us that we will at least revisit this low of this entire candle. So we are now on the 1-hour chart. And guys, this is exactly what most of you guys will just not get the strategy right because you are just skipping to the end of the video. The reason for that is because there is a key detail in here that we have to pay attention to. So since we have identified that most likely we will actually take out the 4-hour candle low, and don't get me wrong, this can actually work a lot of the times, but this will also ensure that you're going to have way fewer trades, which will result in less profit. So what have I told you earlier? We don't really care to predict when that is going to happen. And from here, this is basically just light work for us. We have identified the market earlier and we're just going straight into a take profit. Now, as you can see, we have been in a little bit of drawdown phase. That's completely normal. We're just giving the trade enough room to actually breathe. Now this trade that I've just shown you was kind of a no-brainer. It was obvious that we'll go to the upside because we had just so much confirmation. But here's a trade where it's not so obvious. Because what can we spot on the daily chart alone? We have clear established movement onto the downside. We are just trading lower and lower. So one bullish candle would not mean that we're just immediately going to go higher. Can we spot more things which are suggesting that we'll actually go higher? And there's 3 things that you have to find on the daily chart to trade these kinds of days. Now, first of all, it's going to be the previous day high or previous day low concept as always. Probably we'll go for the previous day high. That's concept number 1. Concept number 2 is that we have also relative equal highs. You have told us that relative equal highs is when you have 2 swing highs being relatively equal close to each other. But out of experience, I know that this candle will be a swing high on the lower time frames. So we'll also count that as relative equal highs. So this is going to be concept number 2. Concept number 3 is going to be that we also have an FEG. Most of you guys try to trade away from the FEGs, but that is completely the opposite of what I like to do. I like to trade into the FEGs. So what was the reason? Why in this case the trade was not so obvious this time? It's because we had clear established movement onto the downside. However, on the lower time frames, since you're a day trader, you like to go on the lower time frames. Once again, there's clear established movement onto the upside. So it is also okay doing a counter trend in these kinds of scenarios. Now on the 4-hour chart, what can we spot? We have a 4-hour FEG in here and another one in here. Whatever I told you previously, we like to trade into the FEGs and not away from them. Pay attention to what I'm telling you in here. Now quickly, you always want to keep it clean, and once the chart gets too messy, remove a couple of things. So what can we spot in here? We have the relative equal highs, the previous day high, and also the FEG. However, there's one more thing that we can spot on the 1-hour chart. All of these swing highs are representing what? Another relative equal high. So you basically have the major relative equal highs, but also the smaller time frame relative equal highs. So this now becomes an A+ setup. Now, and this is where most of you are just going to fail, because you're just going to put your entry right at the candle open, your take profit to the relative equal highs, and your stop loss below the previous day low. This on its own can work some of the times, but it's far from ideal. You don't even have to extend your stop loss that far, even as a negative risk reward trader. What you want to do instead is, since we know that we will drop down to the 4-hour time frame, if you have the opportunity, then still take the timing into your direction. So in here, we know that we'll first go into the 4-hour FEG, and only then we will trade higher. So we're going to put our entry right at the 4-hour FEG. Our take profit is not going to be due to the major relative equal highs, but just to the previous day high, which is now also relative equal highs. Our stop loss doesn't even have to go all the way to the previous day low, because this entire FEG on the 1-hour chart is essentially just going to protect our position from just going lower and lower. So from here, you want to take a trade, you have done the analysis beforehand, and you're quickly going to realize this is another take profit hit. If we haven't done the analysis like that, then most of the times you'll see you'll run into a stop loss. So if you want the full details on how to trade this exact strategy one-on-one, step-by-step with me live in the markets, then a link to my mentorship is in the description down below. Now, and guys, this information that I've given you is great, but on this side on the screen, I've actually shown you why your favorite trader is actually not profitable. And I've actually inevitable proof on why that is the case. If you still haven't clicked on the video that is on the screen right now, then just like the video, subscribe to the channel, and see you in the next one.